What if I told you the most valuable private AI company in the world isn't, the one whose chatbot you probably use every single day?
I mean, that sounds crazy to most people, right?
Yeah, exactly. What if the real winner of the AI race is the one secretly wiring itself into the operating system of the entire global economy?
Which is, frankly, exactly what is happening under our noses.
Right. Well, I am your host, and welcome to today's Deep Analysis. I'm here with our resident tech and finance expert to really unpack this.
Hey, everyone. Yeah, I'm super excited to get into this one.
So today we are breaking down this literal trillion-dollar valuation war between Anthropic and OpenAI. And, understanding this battle, it isn't just about high finance or tech gossip.
No, not at all.
It is really about predicting how the future of your own work, your creativity, and your problem solving will be fundamentally structured.
Yeah, the stakes here challenge pretty much everything the public assumes about who is actually winning the artificial intelligence boom.
Yeah.
I mean, OpenAI undeniably captured the public's imagination, right? They brought generative AI to the masses, but Anthropic is aggressively coming for the enterprise workflow.
Right, the corporate side of things.
Exactly. And that divergence is causing this unprecedented structural shift in how intelligence itself is valued by the broader market.
Wow. Okay, so let's start with the staggering numbers that actually prove this shift, because we have some hard data here.
We do, yeah.
The big shocker is that Anthropic recently raised $65 billion.
Yeah, huge number.
Which gives it a $965 billion post-money valuation.
Yeah.
So they officially overtook OpenAI's reported $852 billion valuation.
Right.
But, I have to push back on this right out of the gate.
Sure, go for it.
OpenAI has all the mind share. Like, ChatGPT is quite literally a household name. How on earth did a company that most casual users have never even heard of pull ahead in valuation?
Oh, the answer really comes down to the quality of the revenue.
Okay, what do you mean by quality?
So hype and consumer subscriptions, they are great for getting started.
Sure.
But durable, entrenched revenue is what actually creates a trillion-dollar valuation. If we look at the annualized run rate, or the ARR,
Right.
Anthropic is hitting a reported $47 billion compared to OpenAI's roughly $25 billion.
Wait, but is that $47 billion in actual cash collected in a bank account? Or is that just like projected contracts? Because in tech, run rate is often just a fantasy number based on one good quarter.
That is a very fair point. It is a projection, yes. It's based on current contracted recurring revenue.
Okay.
But here is the thing. In the enterprise software world, those contracts are ironclad. They are highly reliable.
I see.
And the reason Anthropic's number is so much higher is because enterprise AI attracts immense corporate budgets, while consumer AI mostly just attracts attention.
Yeah, that makes a lot of sense.
Like a consumer might pay a small monthly fee for a chatbot subscription, right?
Yeah.
Just to help write emails or, I don't know, plan a vacation.
Right, 20 bucks a month or whatever.
Exactly. But a multinational corporation, they will happily sign a multi-million-dollar, multi-year contract for AI tools that securely improve their internal coding.
Yeah.
Or handle complex customer support, automate legal review, streamline logistics. It's a whole different ballgame.
I really like to think about it this way. So consumer AI is kind of like a popular app on your phone.
Okay, yeah.
If you get bored of it, or if, a better one comes along, you just delete it and swap it out. The switching cost is basically zero.
Spot on.
But enterprise AI, which is what Anthropic is building, is like the electrical wiring inside a skyscraper.
Oh, that is a great analogy.
Right, because once it is installed into the walls, removing it is exceptionally expensive, incredibly risky, and just super disruptive to the entire business.
That analogy captures their exact strategy perfectly.
Yeah.
Anthropic positioned its primary model, Claude, specifically to be that unremovable wiring.
Right.
They built an entire arsenal around what they call the trust layer.
The trust layer. Okay.
Yeah. When a major global bank or, say, a healthcare provider integrates artificial intelligence, they just cannot afford a chatbot that hallucinates case law or makes up patient facts.
Yeah, that would be a disaster. So you mentioned the trust layer and constitutional AI, which I know Anthropic uses as a major selling point.
They do, yeah.
But how does a constitution actually work for a string of code? I mean, it sounds a bit abstract.
It does sound abstract, but it's actually a fascinating mechanism. So instead of just relying on human testers to constantly correct the AI's mistakes,
Which would be super slow.
slow and really expensive, so Anthropic literally gives the AI a written set of rules, a constitution.
Literally a document.
Yes, this document contains explicit directives like choose the response that is least harmful or ensure the answer relies strictly on the provided text.
Oh, fascinating.
Yeah, and during training, the AI generates multiple potential answers and then it grades its own answers against that written
Yeah,
constitution.
really, it grades itself.
It grades itself and then learns from that self-correction. So it fundamentally alters the model's behavior to prioritize safety and, almost entirely eliminate that hallucination risk.
So they are basically hard-coding reliability over sheer creativity.
Exactly.
And I guess that brings us to their specific tools, like Claude Code and Claude Opus 4.8.
Right.
The sources note that these are completely dominating the software engineering space right now.
They absolutely are.
So they didn't care about being the most famous, they just cared about being the most reliable for developers.
Precisely. OpenAI won the mind share, but Anthropic is winning the workflow share.
Okay, but let's shift gears a bit. To build this electrical wiring for the enterprise, you need unimaginable resources.
Oh, definitely.
Where does a $65 billion cash injection actually go?
Well, let's unpack the mechanics of that raise, because it is not just cash sitting in a checking account.
Right.
It is all about compute access. The sources show that about $15 billion of that raise comes from previously committed hyperscaler investments.
Okay, hyperscalers.
Yeah, including a fresh $5 billion injection straight from Amazon.
But wait, if Amazon is just giving Anthropic billions of dollars so Anthropic can immediately buy Amazon servers,
Right.
isn't that just artificial revenue? Like, how does anyone actually make a real profit in this loop? It sounds like they were just passing the same dollar bill back and forth.
It absolutely looks like a closed loop. And, well, in many ways it is. But to understand why they do it, you have to define what a hyperscaler actually is.
Okay, break that down for us.
A hyperscaler is a company like Amazon, Microsoft, or Google. They operate data centers and cloud computing infrastructure at a global, basically unprecedented scale.
Why they own the cloud.
Exactly. And here's the catch with that Amazon deal. Anthropic commits to spending $100 billion over the next 10 years on Amazon's cloud technologies through AWS.
Wow, 100 billion. So Amazon is an investor, but they are also the primary vendor.
That is the core of the AI cloud turf war. Microsoft has a tight grip on OpenAI. Google has its own proprietary AI stack with Gemini.
Right, so Amazon needed a player.
Amazon absolutely needed a flagship frontier model partner to defend its AWS cloud business against Microsoft Azure and Google Cloud.
Yeah, that makes total sense.
By tying Anthropic to AWS, Amazon ensures that as Anthropic grows, Amazon's cloud dominance grows right along with it. The AI model race and the cloud infrastructure race, they have become the exact same battlefield.
It really connects to the real world in a very physical way.
It does.
It's like the airline industry. The AI model itself, whether that's Claude or ChatGPT, is just the airline's brand. It's the logo painted on the tail.
I like that, yeah.
But the real bottleneck is the fleet. Compute, meaning the GPUs, the physical data centers, the energy grid connections, that is the fleet.
Exactly.
Without enough planes, you can't fly any passengers, no matter how much they love your brand. And without enough compute, you cannot serve users.
Right. The hyperscalers are the fuel suppliers, the airports, and the aircraft manufacturers, all rolled into one entity. They control the physical constraints of the digital economy.
Okay, but that brings up a glaring contradiction in the economics of all this.
Let's hear it.
Anthropic has the fleet, thanks to Amazon and others. But are they actually making money flying these planes?
Well,
Because despite that $47 billion ARR, the sources note that Anthropic is operating at a staggering loss. How can you pull in $47 billion a year and still be in the red?
because we are witnessing the profitability paradox of frontier AI. People keep confusing AI with traditional software.
How so?
In traditional software, companies enjoy beautiful margins. You build the code once, and you sell it 1,000,000 times at almost zero incremental cost to yourself.
Right, it's just copying files, basically.
Exactly. But AI does not work that way at all. AI has software-like revenue, but it has infrastructure-like costs.
So let's break down that infrastructure cost, because burning compute is a phrase thrown around a lot. What does that actually mean for the bottom line?
Okay, so every single time you type a prompt into an AI, the system processes it in tokens, which are fragments of words. Generating the response requires the physical microchips in a data center to run calculations.
Right.
And those calculations consume immense amounts of electricity and generate heat.
Which use cooling systems.
Massive cooling systems. So every single query physically burns compute and power.
Wow.
On top of that, training the next smarter version of the model requires running tens of thousands of specialized chips for months at a time. It is a capital expenditure black hole.
So we basically need to stop thinking about our artificial intelligence as an app and start thinking about it as heavy industry.
Exactly. It's heavy
The
industry.
internet we grew up with was built on, lightweight code and relatively cheap servers. But this new economy requires the modern equivalent of steel mills and offshore oil rigs.
That's a great way to put it.
It is a physical resource-heavy paradigm.
Mm.
But, okay, that raises a major question.
Sure.
Why are elite investment firms like Sequoia, Altimeter, Dragoneer, and Green Oaks paying a near trillion-dollar premium for a heavy industry company that is bleeding cash?
Because they are buying future switching cost power. It goes right back to your electrical wiring analogy from earlier.
Okay, the lock-in.
It is all about enterprise lock-in. If Anthropic becomes the default underlying system that every major Fortune 500 corporation uses to write their code, manage their knowledge bases, and automate their operations.
Then Anthropic gains the ultimate leverage.
Exactly. These investors believe that if Anthropic becomes the operating system for global work, today's staggering financial losses are simply the necessary cost of building an inescapable infrastructure layer.
Wow. But there has to be a mathematical limit to this strategy.
Yeah.
I mean, if they are valuing Anthropic at nearly $1 trillion, the pool of private investors who can actually write checks that large is drying up.
Oh, we are definitely witnessing the end of the private runway.
Yeah.
When a private company reaches this kind of scale, they fundamentally outgrow private capital markets. We saw a similar trajectory with SpaceX. They are now in a category where valuations are so astronomical that going public, launching an initial public offering, isn't just an exit strategy for early investors.
It's a necessity.
It is a sheer necessity just to access the deep institutional capital pools required to keep building these multi-billion-dollar compute factories.
Okay, so Anthropic is forcing the entire market toward an enterprise monopoly, and they are barreling toward a necessary IPO to fund it.
Yep.
If you are OpenAI, the former undisputed king of the hill, how do you strike back against this? You can't just release a chatbot that types a little faster.
No. The era of the basic chatbot is entirely over.
Right.
OpenAI is launching a multi-front counterattack, and the absolute foundation of that strategy is the agentic pivot.
The agentic pivot.
Yeah, they are trying to forcefully shift the entire industry from AI assistants to AI agents.
I want to clarify the mechanics of this because the terminology gets confusing really fast.
Sure, let's break it down.
An assistant waits for a prompt and helps me write a to-do list. But how does an agent actually operate differently?
Well, assistants answer questions. Agents take autonomous action.
Okay.
OpenAI is building digital workers capable of executing multi-step workflows without you holding their hand.
Oh, wow.
We are talking about an AI system that can read an incoming email, qualify the sales lead, log into your CRM, route an IT ticket, cross-reference a complex PDF, and then autonomously send a message on Slack.
That is wild.
It is. If OpenAI can shift the corporate conversation from which model answers questions the best to which AI system can actively run my business operations, well, they sidestep Anthropic's current advantage entirely.
And I imagine a critical battleground for these agents is coding. Because as we guessed, Anthropic is dominating with Claude code.
Yes, the Codex battle is central to OpenAI's response.
Right.
OpenAI is pushing to make Codex a fully autonomous software engineering platform. It is no longer just about an AI suggesting the next line of code as a developer types.
So what are they doing instead?
They want Codex to analyze entire company code bases, design test systems, hunt down security vulnerabilities, and rewrite software architecture completely on its own.
That sounds like a massive undertaking. But, beyond enterprise coding, OpenAI possesses a weapon Anthropic simply does not have.
The consumer funnel.
Exactly. The consumer moat. It is so formidable.
Oh, it's huge.
Millions of everyday people use ChatGPT, and then they naturally bring it into their workplace because it's what they're familiar with.
Right, the bottom-up adoption.
Yeah. Furthermore, OpenAI has secured deep integration into the Apple ecosystem, effectively placing their intelligence layer into the pockets of hundreds of millions of iPhone users by default.
Which is an incredible advantage.
Add to that their multimodal tools, like, the Sora video generation model and their advanced voice features, and the goal becomes pretty clear. They want to be the daily super app for all digital interaction, whether it's consumer or corporate.
Absolutely. And we also cannot ignore the Microsoft Trojan horse in all of this.
Right. Tell us about that.
Microsoft is OpenAI's ultimate enterprise distribution channel. Through Microsoft 365 Copilot, GitHub, and Azure Cloud Services, OpenAI achieves default placement in corporate workflows worldwide.
So they are already everywhere.
Exactly. Anthropic has to actively convince a chief information officer to purchase and install their system.
Right.
But OpenAI, via Microsoft, is already embedded into the Word documents, the spreadsheets, and the coding environments those companies rely on every single day.
Wow, yeah, default distribution is incredibly powerful.
It really is.
But the sources also highlight a more aggressive tactic. OpenAI might use pricing as a blunt force weapon to squeeze Anthropic.
It is a severe risk for the entire industry.
Really?
Yeah, because OpenAI has achieved immense scale with Microsoft, they could strategically lower their API costs.
Meaning the price they charge developers to access their models.
Exactly. If they initiate a brutal price war, enterprise customers might suddenly wonder if Anthropic's slight edge in coding reliability is actually worth paying a premium for.
Ah, I see.
Lower prices sound great for the end consumer, right? But for these AI labs burning billions of dollars on compute infrastructure, a price war destroys their margins incredibly fast.
Okay, let's follow the money on this counterattack then.
Let's do it.
Because to build these autonomous agents, to fund the consumer super app, and to potentially survive a price war, OpenAI needs cash.
Astounding amounts of cash.
Right. The estimates show a $14 to $25 billion cash burn just in the year 2026 alone.
Yeah, it's staggering.
And they need an estimated $120 billion in computing infrastructure by 2028.
Wow.
To secure that kind of capital, OpenAI needs the public markets just as badly as Anthropic. They need the IPO.
They absolutely do. But, and this is a huge but, OpenAI's path to an IPO is a structural and legal nightmare.
Why is that?
Well, most tech startups are built from day one as standard corporations designed to generate profit for shareholders.
Sure, standard stuff.
But OpenAI started as a nonprofit research lab,
Yeah.
eventually bolted on a capped profit arm, and is now attempting a deeply complicated corporate transformation into a public benefit corporation, or a PBC.
Right. Let's use an analogy for what they're trying to pull off here because it's pretty wild.
Okay.
It's like a nonprofit charity suddenly trying to transform itself into Wall Street's most aggressive profit-seeking hedge fund.
Yeah.
But they're having to convince the IRS, their original donors, and government regulators that they are still ultimately doing charity work.
That highlights the friction perfectly. Because, as part of this transition, the original OpenAI Foundation, the nonprofit side, retains a 26% equity stake in the new public benefit corporation.
Okay.
That stake alone is valued at around $130 billion.
Wow.
Yeah. They are attempting to demonstrate that their original mission, to develop AI for the public interest, still holds immense economic weight in this new structure.
But, I mean, you cannot simply transfer hundreds of billions of dollars of intellectual property from a nonprofit entity into a for-profit structure without inviting intense scrutiny.
Which brings us to the severe litigation and antitrust risks looming over them.
Right.
Regulators are scrutinizing every granular detail of this asset transfer. The SEC is watching the corporate restructuring closely.
Of course.
You also have Elon Musk's ongoing lawsuit challenging whether the company has abandoned its founding mission.
Right, that's still happening.
It is. And public markets, they absolutely despise uncertainty. Any unresolved litigation of this magnitude creates a massive risk premium for a potential IPO.
And the scrutiny extends well beyond U.S. borders too, doesn't it?
Oh, absolutely. The Federal Trade Commission in the U.S., alongside the UK's Competition and Markets Authority, the CMA, they are both investigating Microsoft's reported 27% stake in OpenAI.
Okay, so antitrust is a big factor.
Huge. If antitrust regulators decide that relationship is functionally a merger, or that it exerts too much structural control over the market, they could severely limit future exclusivity deals.
Wow.
That complicates OpenAI's core growth strategy at the exact moment they need to show unquestionable dominance to public investors.
This leads us to a concept from the sources that really requires some synthesis here. The philanthropic paradox.
Nice.
On paper, it sounds noble, but it feels like an existential conflict of interest for this new public benefit corporation. Can you walk us through the mechanics of that trap?
Yeah, it is a profound contradiction built right into their new corporate DNA. So remember that the OpenAI Foundation holds a 26% stake in the for-profit company.
Right.
The stated goal is to use the dividends from that stake to fund sweeping social programs. For example, retraining workers whose jobs are eliminated by artificial intelligence.
Wait, So to fund the safety net for people losing their jobs to AI, the foundation relies entirely on the stock price of the company building the AI.
Yep.
That's not a paradox. That sounds like a direct conflict of interest.
You have identified the exact tension. The funding required to save society from AI disruption is entirely mathematically dependent on the ruthless commercial success of the very company causing the disruption.
Wow. Think about the incentives there.
Right. If OpenAI launches an aggressive, highly profitable product that displaces thousands of knowledge workers, the company's stock
And
skyrockets.
then the foundation suddenly has billions of dollars to help those displaced workers.
Exactly. Conversely, if OpenAI decides to hold back a powerful new model because of safety concerns or, economic impact,
Then their stock struggles against competitors like Anthropic.
yes, and the foundation loses the financial ability to execute its social mission. The mandate to protect humanity becomes financially hostage to aggressive, monopolistic growth.
They are trapped in a scenario where they must satisfy Wall Street demands for infinite growth, regulatory demands for caution, safety advocates, and the general public, all simultaneously.
It is an incredibly precarious tightrope to walk, especially under the glare of public markets.
Man. Well, let's bring this macroeconomic war back down to earth, translating what this means for your daily reality.
Let's do it.
We've got Anthropic on one side, leveraging pure focus, deep enterprise trust, and a formidable AWS compute loop to become the unremovable wiring of the corporate world.
Yep.
On the other side, we have OpenAI, wielding unmatched consumer reach, autonomous agentic ambition, and the sheer power of default distribution through Microsoft.
Right.
So when you are choosing AI tools for your own business, or even just attempting to optimize your personal workflow, do not simply chase the chatbot that seems the smartest in a benchmark test.
That is the main takeaway. The market dynamics show us that raw intelligence alone isn't the ultimate prize anymore.
Exactly.
The practical move is to look for the system that integrates most efficiently, securely, and reliably into the infrastructure you already rely on.
Yeah, the real race isn't about sheer intelligence. It is about the cost per unit of useful intelligence.
I like that phrasing.
Think about it in practical terms. If OpenAI builds a brilliant model that charges $1 in compute costs to write a perfect legal brief,
Okay.
but Anthropic figures out how to generate that exact same legal brief for 10 cents by burning less server energy and operating more efficiently.
Anthropic ultimately wins the global economy.
Exactly. It is no longer an intelligence race. It is a brutal efficiency race. Right now, basic digital intelligence is becoming a commodity.
It really is.
But highly efficient, deeply integrated intelligence, that is a durable business model.
And efficiency is the only business model that will survive the crushing physical reality of what it actually costs to run and cool these global data centers.
Which leaves us with a truly thought-provoking premise to consider as we look toward the horizon.
What's that?
The defining test of this new economic era will not be won by the smartest AI model sitting isolated in a research lab. The ultimate victor will be the company that can figure out how to turn limitless digital intelligence into actual, durable profit before the staggering physical cost of computing eats the dream alive.
That is the trillion-dollar challenge.
As you watch these giants battle it out, tearing out the old systems to install their own proprietary wiring into the global economy, you have to ask yourself a critical question.
Which is?
Who will run out of power first? The machines running the models or the markets backing them?
A question that will undoubtedly dictate the trajectory of the next decade.
Absolutely. Thanks for joining us for today's deep analysis. Keep questioning the wiring around you.